Why has crypto been heavy, you think, versus equities? I mean, all the tech stocks have been ripping higher. It's been a really easy trade. Well, crypto's just been choppier.
Yeah, listen, we had a huge run in some ways. Crypto is about narrative and flow, right? And so what's the story? You had a great Bitcoin story for a while, and then it kind of ran into selling. I mean, we sold 9 billion ourselves for one client. Like,
I know, with almost no impact, bizarrely.
But that swallowed all that treasury company buying. And so without that 9 billion, you're probably significantly higher.
Despite solid gains in Bitcoin and Ethereum this year, the crypto market still feels sluggish compared to the booming equity market. Inflation is easing, the dollar is weakening, and liquidity conditions are improving, all factors that should benefit digital assets. Yet, as Raoul and Mike Novogratz explain, the issue lies in the market's microstructure, with large-scale sell-offs and supply overhangs quietly limiting upward momentum. Bitcoin's price has been stuck in a range even as ETF inflows remain strong. The selling pressure from early holders and treasury liquidations has capped rallies, showing that markets move on flows, not just stories. Powell says this isn't weakness but consolidation, the calm before the next big move higher as the market digests supply. Looking ahead, both Powell and Novogratz believe crypto is setting up for a powerful rebound. Historically, major rallies come after the first wave of rate cuts, and with central banks signaling easing into 2026, the stage could be set for a sharp catch-up phase. For patient investors, this may be the moment to stay positioned before the next big surge. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
First, you and I need to talk macro, because that's how we always start. What are you thinking?
You know, we're in such a weird space. The economy is growing pretty strong. You've got a Fed that broadly said we think the economy is going to be a little stronger, and inflation is going to be a little higher, but we think we should be cutting rates. That's why gold is at the all-time high. Bitcoin's at the all-time high. It's a funny world out there. There's a president who is just dead set on picking a Fed chair that wants to cut rates. There's a huge amount of debt that needs to get financed, and so lower the financing cost helps with the deficit.
Although they kind of lose the control of the long end doing that. Well, Japan certainly has, hasn't it?
Japan certainly has. The U.S. is actually the flattest curve of the three.
Yeah.
You know, they're issuing a lot of bills, not a lot of long end. And at one point that ratio's got to shift or it doesn't. And so every single person I know is nervous. And it's funny that, you know, macro, you've made money this year if you just stayed in the trades. Beginning of the year, you say, got to be long gold, long silver, long commodities, long the curve, and probably long stocks. And guess what? Oh, and short the dollar. Every one of those trades has worked. So you look at a company like Bridgewater, who are too big to move. You know, Ben Meltman over there right now, they're up 26%. Ben would have traded himself into a paper bag with all the Trump stuff, but that whole group.
Is Ben's at Bridgewater now?
Ben's at Bridgewater. He's the deputy CIO. He's got a big job.
Wow, I didn't know that.
What a perfect place for a guy that calls him well and might overtrade him. If you can't overtrade, it's been a pretty easy. Most of my other macro friends, their performance is anywhere from flat to up single digits in one of the great macro years because all the Trump stuff with the tariffs, with the slow, has just shaken people out of what were their predictions early on in the year.
And also Scott, who you know as well, has made it pretty clear what they want to do. They've just basically said, he's basically said, I want a weaker dollar. I want to get rates down because I need to refinance the debt, which is a rare thing for them to actually admit what they're doing. and we're going to jam the bills in the meantime. And they're kind of debasing the currency. And he's made it very clear what the trade is. And people just got freaked out by all of the political stuff.
Yep. And listen, we're a very strange time politically in our country, right? You know, the administration, I went to the inauguration, and in the big inaugural ball where everyone was there, the president said, guys, we're going to do more in 100 days than any administration's done in 40 years. And we're going to just hit them and hit them and hit them and hit them. And that's exactly what they've done. They are moving at lightning speed on so many fronts that the opposition doesn't know what to do, but the markets feel like it in chaos. I mean, the downside of it is you are undermining a lot of the great institutions in America. If it's the military, or the Department of Justice, or the Fed, or the FBI, some of that needed to be cleaned out, but you are now really, I think, you know, not cutting out the scar like the virus is, you're cutting through the bone. And that's scary. And I think the market doesn't like that. And the polls don't like that. And so we'll see what, you know, when you run into midterms.
And the other thing is, like, growth is weird as well, because we've got like CapEx growth because of the data centers, which we'll come on to, is exploding. So we've got the fixed asset investment side going up, but Main Street is pretty dead because of rates. So I can see this kind of dichotomy they've got going on.
I was out to dinner last night with it was a group dinner, but one of Scott's top lieutenants was there, and it was interesting. They see the same thing. They're like, growth is fine. You know, a lot of CapEx, not just in data center, but CapEx across the board. But unemployment, you know, but the labor statistics are harder to also get your arms around because you're pushing all the foreigners out. Right. All the immigrants out. And so like in construction, you know, were they on record or not on record? Messy numbers, but it certainly feels like you've got softness in the labor market. That's why they want to cut rates. But you got a pretty strong economy, right? And the second quarter was really strong, and the third quarter looked pretty strong. And so it's a very, you know, I mean, in some ways it's a long equities, long gold, long risk asset market.
That's right. It seems pretty clear from that. And I don't see many major risks on the horizon yet.
Well, the only question is it's become so consensus that, I mean, you saw Paul Jones went on TV yesterday, and I love Paul, and he was like, that's it. We're going to melt up into year end, right? Sometimes those calls become, the great butt of jokes later on in life. You're like, you know, the great thing about Paul, he'll say it and he'll be stopped out by tomorrow.
I know. You never listen to anything he says, as you know. He's got a 3-second time horizon on everything he does. It's like,
well, he is often, the most disciplined guy I know. And that's why I think he's 35 years of trading, and 1 year in his own account, he was down like 72 basis points in 35 years. Like, that's discipline. Don't lose your money, you get rich, right? It's shocking how many people have a few good years and they're like, oh, I had that one down 30. And I was like, what? And one down 30 takes a 45 just to get back to break even, right? And so your Sharpe ratio, one bad year crushes your Sharpe ratio.
Raoul Pal and Mike Novogratz say the key in today's market isn't prediction, it's positioning for liquidity. 2025's strange mix, steady growth, firm inflation, and upcoming Fed cuts has lifted assets but rattled bonds. As investors flock to gold and equities, Pal warns even safe trades can turn risky when everyone's in. Crypto's weakness, they explain, isn't failure but absorption. It mirrors global liquidity and reacts instantly to macro shift. With political uncertainty and record deficits, institutions see Bitcoin as both a hedge and an opportunity, setting the stage for the next major market narrative.
Why has crypto been heavy, you think, versus equities? I mean, all the tech stocks have been ripping higher. It's been a really easy trade. Well, crypto's just been choppier.
Yeah, listen, we had a huge run in some ways. Crypto is about narrative and flow, right? And so what's the story? You had a great Bitcoin story for a while, and then it kind of ran into selling. I mean, we sold $9 billion ourselves for one client. Like
I
that's
know, with almost no impact, bizarrely.
But that swallowed all that treasury company buying. And so without that 9 billion, you're probably significantly higher. Right? Remember, prices are set on the margin. And I think there were a lot of people in the Bitcoin world that had rode this so long that finally decided, I want to buy something. I'm not going to sell all my Bitcoin, but I got a friend that bought a yacht, a friend that bought part of a sports team, and so people trimming because it had been a great run, and you're just digesting that turnover.
And do you think that's the main supply has been old OGs plus miners and stuff like that? Is that the
100%.
main supply, you think?
That's the only supply we've seen. And the other piece has been, remember, Ethereum was dead, and then all of a sudden you've got the Genius Act plus Tom Lee and Joe Lubin with their DATs, and it became a buying machine. And so East had a spectacular run in the last, 2.5 months. But that's, you go from 1,800 or 1,600 all the way to 3,800. That's a pretty good run.
Yeah.
And so, on the year, these things are 30%, 32%. Not stunning. Good year.
But usually it's back end loaded as well. Almost every time.
And so that's the question listen, if you looked at the normal 4-year cycle, you'd be lightening up and you'd be getting flat into Christmas. Like, what could be different? Dangerous freaking words. It's different this time. There are two things that could be different. We are going to pass a market structure bill, and that plus Genius is going to allow, at one point Apple's going to have stable coins on their iPhone. Like there's no excuses anymore that there's regulation around what's a commodity and what's a security and the SEC saying we want you to be on chain. And so I think there's an acceleration of the existing giant players in consumer and financial markets getting into crypto. We are going to see tokenized stuff, probably starting with tokenized equities and mortgages and everything else. That's good for the narrative of all these level 1, L1 chains. You also have a president who says, I'm going to pick a dove, and we are risking Fed independence. Again,
did we really have independence though? Honestly, I don't think we did. I mean, from yelling to go from one to the other kind of shows that it's all one thing now.
Yeah, I thought that was the dumbest move a president had done, is taking a Fed governor and making the Secretary of Treasury. Literally, I thought it was the dumbest thing. I said that over and over. But Chairman Powell's his own guy. You got a president screaming that he's stupid and he's this, and he just sits up and smiles and says, I'm going to do what I think is right. And so I do think there's Fed independence.
And what's coming out of this regulation? Do you have any wind of that yet? When it's going to come?
I think they're two different approaches, but you're going to broadly, I think, say that 20% threshold of ownership is decentralized. If you're under 20, open source code, a few other things, that's a commodity, and it'll be CFTC regulated, and the rest will be security. What's more interesting, I guess, is once you know that, like, where security tokens can trade, and are there going to be different levels? Are you going to have to go through the whole SEC process to become a security token? And is that going to be easier than it used to be? Right? This SEC is unbelievably forward in wanting, like we tokenized our equity. That was all done compliant. We're the first tokenized equity that's the same as an equity, right? There's not but it's trading on solid superstate, which is pretty much a walled garden, right? It's only cool once it starts trading on Hyperliquid or on some decentralized platform, right? Could be Uniswap or wherever. And then you're like, whoa, now we're out in the wild. It feels like this SEC and this administration is pro DeFi. For the simple viewer, why was DeFi such a threat? Well, all the regulation around know your customer that JP Morgan and Galaxy and everyone else has to go through is different in DeFi. The protocol itself won't know their customer. The user of the protocol, the on-link, is supposed to do their best. The best they're going to do is say, we're going to use a radar gun to catch speeders. the fact that this is all in the blockchain, companies like Chainalysis and others to say, hey, we're doing the best we can to make sure no one on the OFAC list is in the trading, no one on the bad actor list is on. But you're not guilty before you, right? And if that's the approach for DeFi, like DeFi is going to eat the world. And that's the approach it feels like the SEC is okay with.
Bitcoin's strong rally earlier this year created massive profits for early holders, leading to a wave of profit-taking that quietly balanced out institutional demand. Mike Novogratz revealed that Galaxy Digital sold nearly $9 billion in Bitcoin for one client, a massive move with almost no market impact. That shows how deep and liquid the market has become, but also why momentum has slowed. Add to that the rise of short positions and suspiciously timed trades by large players, and it's clear that crypto's price action is now heavily influenced by concentrated capital rather than retail speculation. Today, the market isn't weak, it's consolidating. Large holders are locking in profits, institutions are cautious about timing, and regulatory uncertainty still lingers. Yet beneath this calm surface, the groundwork for the next major move is already forming. As liquidity expands, regulation matures, and new capital flows in, Bitcoin and the broader crypto market could enter a powerful new phase. Do you think Bitcoin's current slowdown is healthy consolidation or hidden manipulation? When do you expect the next major crypto rally to begin, late 2025 or beyond? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.